From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for July 18, 2018. Today we're looking at the USDCAD, the US dollar versus the Canadian dollar for today's trade analysis. Starting here on the daily time frame, we could see this currency pair long term has been in an uptrend. Look at the black trend line here, rising since all the way back here in April of this year, April 2018. We have been in an uptrend. Prior to that, we actually started earlier this year, back in January, all the way down here into the 122s, the bottom of the green trend line. So we have been in an uptrend here for the dollar CAD for quite some time, now pressuring into the mid 1.32s. Within the uptrend, the black trend line, we've seen periods where the market went into congestion, hesitation, ranging, consolidation. The blue trend lines here show us those periods where it went down a little bit and then started going back up, went into congestion, went back up. Even in recent weeks, we've seen the market pull back from the highest highs and pull back down into the 1.3 thousands again. Now we're resuming the uptrend. We can see the market over the past week and a half or so resuming the uptrend, starting to pull back higher once again from the 1.3 thousands, now back into the 1.32s once again. So we're looking for a continuation. We're looking for the market continue to do what it's doing. We've seen oil falling off. That's a boost for this to go higher. We've seen the US dollar making new highs. That's a boost for this to go higher. All of that, kind of the perfect storm for the USDCAD to continue its bullish run that we've been seeing over the past week and a half. So let's take a look at this green zone. Let me zoom it in a little bit here. You can see over the past week and a half, 1, 2, 3 days, 4 days, finding resistance here, 1.3205, 3225, right in this area. We've actually seen that before, middle of the blue trend line, a couple of days finding resistance here. Far left on the way up, the previous time we found resistance here at the green zone. So we know that the green zone was significant resistance historically and factually. Now what we see is the market pushing through that. So when the market gets above it, it has this tendency. What did it do the last time the market got above the green shaded area? Well, it's not too hard to see. If you look back here to the left where the blue circle is, it went to the yellow shaded area. So that's our expectation right now. Staying above 1.3225, the green zone, is that the market continues to pressure to the yellow zone, 1.3270, 1.3285. So if it's going to do that, we need the right opportunity to get in. Well, often what I'm looking for, if I'm looking to buy a currency pair, I want to buy it at a low price, not the high price. So today, right now, at the very current moment of the recording of this video, we are at the highest high for the day. I don't want to buy it at the highest high for the day. I would actually prefer it to dip back down to 1.3225 to give me an opportunity with lower risk and higher reward. What's the risk at this point if we were to buy the dollar CAD? Well, the risk is that it turns back around and gets back under the green zone, because if it does that, there's a greater expectancy it goes back down to the blue zone. So above the green zone, we're targeting the yellow zone. Below the green zone, we would target the blue zone. So as long as it's above here, our lowest risk is waiting for it actually to dip back down to the green zone. Our stop loss then goes below the green zone, so we can know what our risk is. We know what the potential loss is if the market flips its direction and goes back in the other direction. Let's go ahead and take it on down to the 4-hour time frame. So now that we get down here to the 4-hour time frame, we can get a little bit of a different vantage point, can't we? We can see the market already is above this green shaded area, which again for the past several days hasn't been able to do that. You take a look right here and the market found resistance. You take a look right here and the market found resistance, and once again, not even that, just over the past several hours we've seen the market finding resistance here. So we've seen a change of the status quo here. That's really what we're looking for often, is a change in market behavior, change in price action. Resistance, fall, resistance, fall, resistance, hesitation, breakout. So again, the idea is that if we're going to buy it because of the momentum and the breakout scenario, and our risk is that it gets back under the green zone, more likely what we wanted to do is dip back down to the green zone, 1.3225, which is about 20-25 pips lower than current market. It gives us 25 pips better risk, and then we look for it to continue its rally towards the yellow zone. All of that would likely change if something suddenly happens. We were to suddenly get a bearish move here. Let me just change this to look more like a little bearish candle expectation here. So if we were to suddenly get a bearish move, it turns back underneath on the current candle, back under the green zone. Of course, that changes our expectation back down to the blue zone. But as long as it doesn't do that and it stays above the green zone, I think the check back to the green zone becomes a buy, targeting the yellow zone for the dollar CAD today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.